Hi, everyone. Thank you for joining this Heritage Foundation at Facebook Live. Well, 2018 is fast approaching, and a topic that's pretty unavoidable here in Washington, D.C. is tax reform. And here to break that down for us is Adam Michel, who's a tax policy analyst, and he's going to kind of walk us through what's going on. So, over on Capitol Hill, the House and Senate both have their own GOP tax bills. Tell us what's going on over there.
Yeah, so right now we have two bills. One in the House that's already through committee and is going to be voted on tomorrow, we think, on the floor of the House. And so that's the details there are pretty set. In the Senate, they're a little bit not quite as far along in the process. They have a bill that's in committee. It's being marked up right now, so that means they're still making changes to it. And hopefully, in the next, like right after Thanksgiving, we're thinking we'll see that bill be voted on in the whole Senate, and then they'll have two bills that are slightly different, and they'll have to come together and sort of hash out the differences in what's called a conference committee. So a lot of these things are still moving around, but we have sort of the general outlines of these two plans set out.
Now, Adam just recently wrote a paper that is on heritage.org. It's also on our Facebook page. If you scroll down a little bit, you'll see it there. But it kind of outlines the differences in the House and the Senate bills. And there's an awesome graphic on there that I have a printout of that kind of goes through what the current bill is, what the House bill says, what the Senate bill says, and what our recommendation is. So definitely check that out. But if you could just run through some of the most notable differences within the House and Senate bills.
Yeah, so I think it's probably best to start where they're similar. Then that's those broad strokes are the important pieces. So for the individuals, both plans double the standard deduction, so that's exempting a large portion of income. If you're single, 12,000; if you're married, 24,000 from any income tax. The both plans generally lower rates on most middle income Americans. There's a double or not a doubling, a increase in the child tax credit, $600, $650 in the Senate. And then on the business side, the corporate tax rate is reduced. We currently have the highest corporate tax rate in the developed world, so lowering that means that businesses can create more jobs in America. That's what really gets the economy going. And then there's also small business or pass-through business reforms in both plans that look that's probably where they both try to move in the same direction, but there's a little bit of difference between those two. The differences between the plans: the House repeals the death tax, the Senate plan doesn't. They both raise the exemption for the tax there. The both plans try to get rid of most of the state and local tax deduction. The Senate thankfully gets rid of all of it, which is a really great reform. The state and local tax deduction subsidizes high tax states through low tax states, allowing you to write off the taxes that you pay to state and local governments. The House doesn't fully repeal it, but hopefully they continue to move in the right direction.
And tell us a little bit about some of the key components of that. So the state and local tax deduction, you mentioned that. Why is it so important to repeal that?
Yeah, so currently, if you live in California, New York, New Jersey, and your government charges you a whole bunch of taxes, both property taxes, income taxes, sales taxes, you're able to write that off. If you live in Tennessee, for instance, and you have a smaller government, you're not paying as much taxes, you get a much smaller write-off if you choose to itemize. And so a similar taxpayer earning around $75,000 in Tennessee versus New York. In New York, they can write off over $3,000, where in Tennessee the average write-off is only about $900. And so that's the same taxpayer in two different states, one getting a totally different tax write-off than the other. That's just on its face unfair, let alone the distortion where California can jack up its taxes and everyone else subsidizes that.
Now, another unfair tax is the death tax, the estate tax, death tax that people say. Talk to us about that and what the Senate and House plans have in store for that.
So both plans double the exemption. Right now, it's a little over $5 million is exempted from the estate tax, and both House and Senate plan to double that. The House, I believe it's 6 years down the road, fully repeals the tax. The Senate leaves it in place, and this is really a case of both of economic and tax policy malpractice. This is a tax that most people across the political spectrum agree should be abolished. It's all of this income is income that's been taxed already or would be taxed under some other provision of the tax code, and it's a drag on the economy because it's essentially a tax on small business, on medium-sized, large family-owned businesses, farms, factories that really it's like it only hits this small subset of people, and that's just an unfair way to go about raising revenue.
Now, what about businesses? Are either of these good for businesses? Talk about the corporate tax rate and that.
So this is the most exciting part of the tax reform plan. The individual reforms are important, and they're simplifying it for most taxpayers. But the business side is what's currently holding back our economy and keeping wages from rising. We've seen over the past 8, 10 years or so, businesses have been either not expanding in America or right out leaving America because of our broken business tax code. Prominent examples are Burger King has moved to Canada. Anheuser-Busch is no longer an American company. They've moved to Belgium. And that's a product of our broken business tax code. So as I said, our current corporate income tax is the highest in the world. If this plan brings that down to 20%, which will lead to businesses investing more in America, growing more, investing more in American workers, and all of that turns into a higher raises for Americans and larger paychecks.
And on that note, what would you say to people who say, this is only good for the rich? How is this good for the middle class families?
So Republicans actually gone out of their way to make this not a big tax cut for the rich. I would like to see tax rates come down on everyone, but this plan, especially the House plan, doesn't lower that top marginal tax rate from 39%, 39.6%. They leave it. They actually add in a sort of phantom, what's called bubble rate in there that tries to claw back some of the tax cuts that rich people do get. So as a whole package, if you're earning $1 million, your taxes are probably going to go up under some variation of these plans. There is some tax relief for small businesses, but that's really tax relief for all of the people those businesses are employing. When you hear the sort of talking points from the left is just a tax cut for the rich, when you're talking about tax cuts for small businesses, that we're talking that they don't. Like, that's a tax on a business is just a cost to them, and it's going to get passed on to someone, and it almost always is passed on to workers through lower wages.
Now, in a recent article you wrote, you said that this is an incredible opportunity for them to kind of take the best components of the House and Senate bill and put them together. If we could put together a wish list of things that we really want, what are the best parts that we really need to see come out of this bill?
So on the business side, I think keeping that corporate rate at 20% is really important. The Senate bill is simpler for that pass-through income for small business income, so I like where the Senate's heading there. The Senate also lowers that top marginal rate and lowers marginal rates for everyone across the board, so that's really great in the Senate plan. The House bill goes a long way of getting rid of as many subsidies and credits and deductions as possible, where the Senate isn't quite as bold there. So I like that piece of the Senate bill. And if we put all of these things together, fully eliminating the state and local tax deduction, I think we can provide an even larger tax cut for sort of middle class Americans through lower rates rather than adding back in the additional subsidies. So that's where I hope to see them go, but they're in the middle of this sort of juggling act here in Washington, where they put themselves in this box where they only can cut taxes by $1.5 trillion over 10 years, and that's why we've seen some of these maybe trade-offs that we're not as happy to see. Some of the when you hear like, I'm not getting as big of a tax cut as I thought I would have, that's really because Washington isn't willing to cut spending, isn't really willing to really make bold decisions when it comes to these things, and that's sort of the political reality we're in.
Well, it's hard to believe that, the holidays are upon us. Thanksgiving is next week, and this is really crunch time for the GOP. Do you think that we're going to be able to see something pass before the new year?
I'm very optimistic that we're going to see tax reform get to the president's desk by at least the end of the year. There seems to be consensus around both of these plans. The broad strokes look very much the same. There's understanding that we need economic growth, that we can't sort of continue to watch American businesses leave the United States for other countries. And so that's what this bill is really about. It's about re-energizing the American workforce, American investment, and American businesses, and then hopefully being able to also provide a significant tax cut to sort of average Americans. So there's sort of two pieces of this bill. It's the tax cut for individuals, and then the icing on the cake, which is this economic growth that comes with it. And so there's no reason we shouldn't all be supportive of that. And and I think Washington understands that.
Tax Cuts and Jobs Act, right?
That's what
that's
they're
everything
calling
we
it.
want. Well, thank you so much for that. We really appreciate it. And thank you all for joining us today. Be sure to head over to heritage.org to see more from Adam and Michelle. Stay tuned on our Facebook page so you'll never miss when we go live.